Okay, welcome everybody to day 5 of this pre-game to the Build More Wealth Live Challenge next week. I hope you've enjoyed every single day so far. I hope you've managed to attend days 1 to 4. But if you haven't, don't worry. Today, we're going to bring it all together. Day 5 is where everything comes together that you've been learning about during days 1 to 4. So super excited to have you. If you're brand new here, please drop in the comments or in the chat box where you're from. We would love to call that out and hear from you. That will be amazing. And then in about a minute's time, we're going to get started with some testimonials from our fabulous students who have massively benefited from the Build More Wealth Live Challenge in the past. You'll get to hear from them, see some of their incredible success stories, as the Build More Wealth Live Challenge has literally been life transformational for so many of our students. So super excited to show you that in a minute. So just drop in the chat where you're from. That'll be amazing. And let us know where you're from. That'll be pretty cool. Thank you. We're going to get started in about 7 or 8 minutes time, just waiting for everybody to tune in, to come on through into Zoom or onto social media, wherever you're watching this from. Welcome, Stu from Australia. Fantastic. Great to have you. So my name's Tristan. I'm over here in England in the UK. So it's super exciting. Welcome, Stu. Have you managed to attend all of the days so far, Stu, or is this the first day you've actually attended? Let me know in the comments. Drop a 1 if it's your first day, or that'll be good to know. Wow, amazing. Cincinnati in the house. Rhonda, great to have you. Uma, another from Australia, from Brisbane, Australia. Welcome. Welcome, Rhonda. Okay, let's get started with these fantastic student testimonial videos then, shall we? So, and then I'll be back with you in a few minutes' time, and then we'll be ready in about 6 or 7 minutes' time to welcome Kiana Danielle to the stage. Well, everything comes together on day 5, so get super excited, bring the energy, and we're gonna have an amazing time. Okay, let's go.
I don't come from money, right? You know what? I started working since I'm 14 years old, and I've always done things on my own.
Imagine you started doing something and in less than a year you get an award.
And what Kiana brings to the table is just something so authentic and so genuine that you just know that you were supposed to be in this space with her, and she's just helping you every step of the way. It's truly an incredible feeling.
Built up the business slowly, and then, hey, next thing you know, I am at $100,000. So it was great.
A celebration of my win, but it shows that I invested in correct thing. I could achieve what I was looking for. And it's a proof that Kiana's method works.
My name is Patrice Garcia, and I am a financial advisor. And then I actually did resign from my W-2 job, and now I am officially a business owner.
Ron Jensen. I'm a certified life coach, and I've been doing that for 30 years.
I know people who are action takers and money makers, and that's one of the things that Kiana's taught me. Trust the process, and because if you don't do it now, when will you actually go and change your life?
And Kiana gives you all of the things you need to get there and become the best version of yourself.
By just seeing how many people received awards and some met $1 million, that's a proof that it's really working. It's really working for everyone, and it doesn't matter what's your educational background.
Kiana is the right person. She teaches you in a style that is very easily understandable.
Enjoy your life and earn your freedom back. You're going to get your time back. And especially if you're a mother, you have a family, or if you have other passions that you want to spend your time doing, this is the way to do it. And if you keep waiting, you're going to keep putting it off, and there's never a perfect time. So just do it today and enjoy your life.
Move forward, because I know the price of letting fear stop me, and I didn't. So please don't let that happen to you. I'm really grateful to have someone come to me that has walked a path, that has learned from suffering, and help other people not to suffer, because that's pretty much my story too.
I was able to make it to 100K, and now because of that, we'll be able to build our basement. Because we thought, oh, that's going to be in 10 years from now. But when you're investing and you know how to invest and, you know, make your money grow, like Kiana says, make your money make babies, then you have cash to do what you've always wanted to do a lot sooner.
I am Jasmine Perez. I am a pediatric oncology nurse.
Trust the process, and because like if you don't do it now, like when will you actually go and change your life?
Say something. I can't tell you how much this community, when I say I was broken, like I was broken. Like I don't know where I would have been if I hadn't found you, if your ad hadn't popped up. I signed an offer with the job, and the thing they liked was what I'm doing with my empowerment. They want me to come and empower their employees. They want me to help them stabilize their culture, and they're like, what you're doing with women's empowerment, that's what we want to do for our employees. I would never have had this opportunity if I hadn't found you. My year would have looked completely different. My life would have looked completely different.
I am Janie Clay, and I am a nurse practitioner.
My name is Shelly Flores Hernandez, and I am currently a licensed optical manager. I work for an optometrist, but I also do other things on the side.
My name is Ramona Mukherjee, and I am a psychotherapist at present on my way to becoming an entrepreneur.
But with the entrepreneurship and the passive income streams, it's a faster way to be able to get those things that you wanted in your life that you thought you'd never get.
I would definitely say Kiana is like the most amazing person. She's real. In person, I'm amazed that I met her, because I'm like, wow. Because she transmits that all through a video, and she knows what she's talking about.
I've been yearning for so long to feel like, what's the path? Where's the direction? How can I do this? How can I do this in a way that feels accessible to me as a woman, as a woman with an immigrant background? And I feel so grateful and just like really activated that I finally have that path. It's something about the way Kiana leads it and all the people that are part of it, part of her team.
Yeah, for me, it's that. It's being able to do what you want in your dreams and realizing that it's possible. And I want to be able to share that with my son and build like this wealth so that it is possible. That I can give something to him and know that he'll be able to do whatever he wants in life, and to be able to give that gift to him.
People who are action takers are money makers, and that's one of the things that Kiana's taught me. Other things I'd love to say about Kiana is she's so humble and she's so sweet, and she's just an awesome role model. And honestly, I just wish that, as I go on this entrepreneur journey and business journey, I want to, have that for myself as well. Never forget my roots and always be humble and nice.
I shifted my mindset more than anything, and now I have the resources to kind of follow through with that mindset and with that decision, because you can make the decision all day, every day, but if you don't know what to do next, you're not going to get anywhere. So I think that's the biggest thing, is taking action and knowing what action to take.
I felt transformed. Like I just needed to know more. I needed to be in that space that she was in. It was just a certainty that I hadn't felt in a very long time. So where I am now, it's been less than a year that I've been on this journey, and I am a completely different person.
The teaching, the foundation, is what really we need in life. Because if we don't have that foundation, we're just picking and guessing. And Kiana changed that whole phrasing into, you have to understand what you're doing,
And Kiana gives you all of the things you need to get there and become the best version of yourself.
It's not only about investing. You will be empowered, you will be confident, and it will help you to make better decisions in different aspects of your life.
I would like to say that I am just truly thankful and grateful for Kiana. She is a humble person. She is a giving person. In less than a year, I was able to get to that 500K level.
Wow, our amazing student testimonials there just to warm you up, to help bring the energy. But it is now time for day 5. So with that being said, it is time to welcome best-selling author, CEO of the Investiva movement, Kiana Danielle, to the Zoom stage. Welcome, Kiana.
Welcome, welcome. Oh my gosh, welcome everybody. Thank you so much, Tristan. Can we give it up for Tristan here? He is up in the UK. I don't even know what time it is. It's like midnight. It's definitely over 2 in the morning. That is dedication to you guys.
Bringing the energy.
Tristan is doing this for you. He is up for you 2 in the morning so that he can bring up the energy, so that you can take the most, get the most out of this pregame. This is just a pregame party. This is our pregame. If this is our pregame, what's going to be our actual party? You're going to find out on Monday, but right now, team, welcome, welcome, welcome. I know more people are joining right now. I'm curious, for those of you who've been here in day 1, day 2, day 3, day 4, put in the chat box, which day have you attended? If you've attended them all, just put in all. Was it day 1? Put it in the chat box if it was 1 or 2 or 3 or 4. Oh, Sophia, day 4, as I was here first time. We have a lot of newbies. Don't you worry, we got you covered. We got 4th and 5. First time here. Hello, hello, hello. Let's do a little bit recap, team. So many amazing people have been doing this for playing full out, and they invested in themselves. And for those of you who are new today, that is fine too. We got you. And this is just a pregame. This is just getting started. So for those of you who've been here 1 day, 2 days, 3 days, 4 days, or maybe the whole time, let's share some of your takeaways. I know day 1, we basically went in to your brain and we completely switched up, shaked up all of those deep, dark, disgusting money beliefs that will prevent you. They were like literally holding you back. Every time, like, okay, I'm gonna go make some money, and I'm like, oop, no, 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 no. Wealthy people are greedy. You don't want to become that. How many of you have ever had a negative, disgusting belief around money, around wealthy people, around having a lot of money, about abundance? Put a 1 in the comments if you've ever had any of those thoughts in your head in the past. And obviously, I used to be one of them. We call those kind of thoughts welfare diva thoughts, because guess what? As long as I believed in those thoughts, I stayed broke as a joke. And sometimes I would even say, no, 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 I love money. Like I was like, I love money. No, I love money. Love money is great. Money is great. And then we had people around me, or I would watch a TV show, or I would see a movie that trashes the wealthy person. How many times have you watched a movie or a TV show where the villain is the entrepreneur or is the wealthy person? How many times have you watched that kind of movie? Like, it's still ongoing. Like, I'm seeing a lot of hands raising up over here. So even if you think you love money, then those movies are programming our brain without us even knowing. India, this is culture. This is all over the world. This is not just in like outside of America or in America. It's everywhere, every single where. Like I went to Japan, you were not allowed to talk about money. I was in Iran, you know, new money, like everybody have their thoughts about the rich people. And guess what? They stay broke as a joke as a result. So we went in and we shifted your money beliefs to some empowering beliefs. For those of you who were here day 1, share with us, share with our newbies here today, some of your new, amazing, empowering money beliefs that you are substituting with those subconscious beliefs that you had before that were getting in your way to success. Share them in the chat box. So for example, one of my biggest shifts was that, like, I always thought, okay, if I become wealthy, I'm going to become, you know, a jerk, you know, a jerk. Seriously. Like, I was like, okay, wealthy people are jerks. And that was one of my things. And then when I finally met a bunch of millionaires and billionaires who were so modest, so down to earth, so amazing, so helpful, giving to charity, my mindset completely changed. So that was day one. And I want to ask you guys, I want you guys to look inside for a second. Like, be real with yourself. Be real with yourself. Who are you? Do you think you really deserve money? Do you think you deserve a lot of money? Do you think that you deserve to live in abundance? Yes, I am abundance. Yes. Can you see yourself just dancing in joy, absolute freedom, absolute contribution, absolute giving, absolute love, using money as a tool to create abundance for yourself, filling your cup, and then you're so full that you're now giving that abundance, spreading that abundance all around you. Can you see that? Can you feel that? Can you feel that to your core? Do you believe that? Do you know that? Do you know that? Because knowing and believing are a little bit different. If you know, then that is how you are being. That becomes your state of being. Abundance becomes your state of being. You are, I am. Say it with me. I am abundance. I am abundance. Abundance is my state of being. Wealth is my state of being. Amazing. So good job. So good. We are getting comments about my hoodie. This is the Investida hoodie. When you come to the Build More Wealth Live, you have a chance of winning one. That is how you can get it. I'm so glad you asked. All right, so that was day one. Day two, we went into recession. We covered different types of market cycles and what happens, and recessions happen every 3 to 5 years, and that nobody knows what's going to happen in the markets, even though we can anticipate. But the best thing that we can do is to get in the market and then know our risk tolerance, and then create an investment strategy that is suitable to who? Suitable to yourself. Suitable to me, suitable to you, suitable to you. So that is what we kind of left off yesterday. Yes, day two, day three, we went deep into risk management. We went deep into calculating your risk tolerance, your ability to take a risk, your willingness to take a risk, your confidence in the asset that you're investing in. How many of you guys remember the three components of your risk tolerance? Your ability, your willingness, and your confidence. Which one of the two were correlated? Which one of the two, if this one goes up, the other one will go up as well? If your confidence in the asset goes higher, which other component of your risk tolerance goes higher as well? How many guys remember? If your confidence in your asset, in an asset goes higher, which other component? Willingness. That's correct. Because willingness is your emotions. Ability is pure numbers and your current financial state. So even if you may have the ability to take a risk, you may not have the willingness to take a risk, especially if you're not confident in that asset. Does that make sense? Somebody say yes. So that was day 3. And then day 4, we talked about asset picking, how to pick an asset and how to increase your confidence in that asset, especially if you're investing long term. How many of you guys remember our Investiva Pledge of Allegiance? I said something, I guess it was, I came up with it yesterday, it was like something along the lines of Investivas, we the Investivas and Investivos, we invest intelligently. We take measured risk. We buy intelligently, we hold intelligently, and we sell intelligently, right? Yes, assets aligned with your values. So yesterday was about picking that asset. Now, how many of you have kind of noticed that, you know, the prices of stocks and cryptocurrencies kind of go up and down a lot? How many of you guys have noticed that? Put a 1 in the comments if you've noticed that the markets go up and down, and sometimes it's up, sometimes it's down. Now, how many of you would prefer to buy at a lower price, to buy a stock cheaper? Put a C in the comments if you want to buy a stock cheaper and then sell it at a higher price. That's cool, right? Because if you buy low and then you sell it at a higher price, what is that gap? That is called the P word. That is called your profit. Yeah. Some of you guys would like to develop an investment strategy that will stack the odds to your favor. Now, again, we talked about day 2 that nobody knows where the market goes. You guys remember that, right? Now, while nobody knows what happens tomorrow, what's going to happen tomorrow, when nobody really knows what's going to happen day to day, it's kind of the same thing as history. How many of you guys have heard the term history repeats itself? How many of you guys have actually read history and you've noticed, wow, things really do have a pattern? When this kind of person comes into power, then this happens and that happens. And this has been going on for years and years and years and years and years, thousands of years through so many different empires, haven't it? Isn't that crazy that we, the humans, just repeat the same crap over and over again? It's just our nature. How many of you guys have done this yourself? Like you get into a pattern and you do the same thing over and over again in your relationship. You know, unless you completely break the pattern, what do you typically do? You get with a boyfriend, you're lovey-dovey, and if depending on your patterns, you're probably gonna have you're like identifying patterns, right? So everybody has a pattern, and so does the markets. Do you guys know why? Why do the markets have a pattern? It's because the markets move. Actually, this is a quiz. What moves the market? How many guys would like to know what moves the markets? Oh, we're getting some really good answers. Yes, you guys are right on top of it. Yes. What moves the market is the emotions of the people. Because we can get somebody to come and evaluate, this is the actual price of the stock. The same thing, like we're buying a house right now, we're having an appraiser coming in, like price the house. And obviously what is pricing versus what we're paying is completely different. Is because of the emotions and the supply and demand that is actually in the market that is driving the price of the house that we're buying. Whereas the appraisal, is that what they call it? The guy who came and said, oh, this house is worth this much. And we're like, oh, awesome. We're paying this much. So that's cool. And that happens also in the stock market, right? So because the markets, cryptocurrency market, stock market is driven by emotions, guess what people do? They do the same stuff kind of over and over again. They may not repeat the same exact thing, but it kind of rhymes. develop patterns. And then by studying those patterns, which is super cool, you get to stack the odds to your advantage and create strategies that suit your risk tolerance. What do I mean by that? What do I mean by strategies that suit your risk tolerance? It's because nobody really knows how low the market is going to go. But now you know your risk tolerance and you can see the patterns and you know it's not going to be exact. But now you can say, okay, this is how much I'm willing to wait if this is the pattern. Or you might be like, no. I need this asset in my portfolio ASAP. I'm not going to wait. I'm so certain in this asset. Long term is going to go high. I don't care about the patterns. I don't care it's at all-time high. I need this in my portfolio right now. Or you might say, you know what? I can't make a decision. I want to have several entry levels. Now, how many of you guys have heard of this thing, an investment method called dollar cost averaging? Dollar cost averaging. Put a yes in the comments if you've heard of dollar cost averaging. Put a no in the comments if you've never heard of dollar cost averaging. All right, awesome. So we're going to talk about, would it be okay if I share what dollar cost averaging means? Okay. So day 2, we talked about and we proved basically that no matter how gloomy the Dr. Dooms, such as Michael Berry, get about the future of the markets go up, even in other countries. We're not even talking about just the US. All right, so the markets, because there are more people who are born, like we have now 8 billion people in the world, and they're going to need stuff, right? And for that reason, they're going to have to be more companies. And for that reason, if you're investing in those companies, you're going to eventually make money, regardless of a recession and long term, eventually the markets all go up. Now, but there's going to be a lot of ups and downs. Dollar cost averaging is this concept of, you know what? I don't want to even like look at the markets like ever. I'm just going to get into a habit of contributing to my portfolio, let's say once a month, once a week, once every 3 months. So I'm going to create a habit. And no matter what the price is at the beginning of the month or at the 30th of the month, whatever it is that is going to be my strategy, I'm going to buy a bunch of stocks or whatever it is my stock of choice. And typically dollar cost averaging, they do it with index funds. You know my opinion on index funds now, but they would just, go in at whatever the price is, and then they would be completely hands off. And that, I showed you guys the chart on day 2, I think, and it showed that if you dollar cost average, and sometimes you might buy at the all-time high, sometimes you might end up buying at the bottom, at the middle, wherever it is. And over time, somebody who does dollar cost averaging is going to make more money than somebody who left their money in the bank and were too scared of getting into the market altogether. And you know what? I actually want to find that chart for you guys, because there's an actual research on this of how much more money a person who does dollar cost averaging makes than somebody who gets the markets wrong every single time compared to somebody who gets the market right every single time. And they would just do that, calculation on the markets. And of course, it's hypothetical, but it gave us a very cool understanding that, dollar cost averaging is great. It's like literally next step after somebody who gets even if somebody who gets everything wrong is going to make more money eventually over the course of 10 years, 20 years than somebody who left their money in the bank. Leaving your money in the bank, you're sitting in the fire, inflation is going to kill it, done deal. Now that you know that, like, how many of you guys already know that investing is the way to go? Like, how many guys already understand that keeping your money in the savings account is detrimental to your financial freedom, to your potential of becoming abundant, to wealth building, to generational wealth. All right, we're getting all these yeses. So if you guys already know that investing is the way to go, now you get to decide which kind of strategy is going to be suitable for you. The easiest, most hands-off way to go is dollar cost averaging. And you have to get into that habit. It is a great way to just get started. And then we're Investivas though. We always make things a little bit better. And because we want to make things a little bit better and make this investing journey super personal to you, so you feel confident, so that you feel at ease, so you don't have to get up, because when you dollar cost average, I used to do that, team. I used to do that. And as much as you want to be hands off, you kind of get panicky sometimes, especially when you just bought at market price and you're still in your account and the market like drops, you kind of panic. So that's why at Investiva, we do things a little bit differently. Would it be okay if I share with you how we still use dollar cost averaging? We don't try to time the market, but we dollar cost average smartly, intelligently. How many of you guys would like to, instead of just blindly dollar cost average, create an investment strategy that is unique to you, suitable to your investment goals, suitable to your risk tolerance, so that you have peace of mind when you are investing? Would it be okay if I share a little bit of that with you guys? And again, for those of you who are watching me on TikTok or on Instagram, go to the link in my bio, put in your email address, and we'll send you the Zoom link that I'm right now on, right? Okay? So we're going to talk about this concept that I developed 10 years ago, and it's called the Investiva Diamond Analysis. And it has 5 points. These awards that you see above my head and above Tristan's head, I don't know if you have to talk so that you come on the screen. Tristan is one of our award winners. He's got this one.
This one right here that you can see here. There you go.
There you go. And all of our awards are in the shape of a diamond because the Investiva Diamond Analysis has 5 points. How many points? 5 points. And that is what it looks like. Once you make your first $100,000, you get this award. Your first $500,000 in your portfolio, you get this award, and your first $1 million, you get this award, which is going to be super awesome for you. So it has 5 points. And so we've basically been covering the 5 points of the Investiva Diamond Analysis in the past 4 days. And today we're going to tackle the final point of the Investiva Diamond Analysis. So I'm going to share that with you guys right now, just so that you can see. I'm going to share my screen. And I have our more recent fancy Investiva Diamond Analysis. But point number 1 is capital. That is what we did on day 2. Capital analysis, when you understand where you stand financially currently. That is your capital. What is your cash flow? What is your risk tolerance? All of that goes step number 1. Step number 2 is goal setting. We set our goals yesterday. How many guys have your short-term goal, medium-term goal, and long-term goal? That goes here. Now you know why you are investing. What is your goal? What are you hoping to achieve? Are you hoping to achieve long-term capital gains? Are you hoping to achieve cash flow, revenue stream? All of that goes into here. Then step number 3 is fundamental. That is asset picking. We covered that a little bit yesterday. We talked about how to pick value assets that goes for your long-term goal, no matter, well, typically for a lower risk tolerance. Obviously, there are so many different nuances. We get deeper into that in the Power Course, in the Make Your Money Work for You Power Course. Actually, how many Power Course members are here today? I'm curious. And then point number 4 is market sentiment analysis. and then we got technical analysis. And today, day 5, is the last day. I'm going to try to cover as much as I can from these 2 final points. And obviously, they both kind of tackle the patterns and the emotions of the markets so that you know where other people are feeling, and you know the history, you know the pattern. And then based on all of this information, you can go ahead and create an investment strategy that is exactly suitable for you and your unique circumstances. All right, does that make sense, team? All right, got some of our Power Course members here in the group too. Super duper cool. All right, let's go. So step number 1 of figuring out what the market participants are feeling about a particular asset. I'm going to ask you a question. How would you gauge what other people are feeling about the markets, about a particular asset? How would you know? Eileen says news, watch the chart, start with forums, critic reviews, word of mouth, social media, chart volumes, RSI. Wow, we have some experts here. Yes, RSI is our favorite. So it's funny because I forgot using it. Like I stopped using RSI for whatever reason. And Tristan one day is like, let's look at the RSI. I'm like, oh, you're right. Let's look at the RSI, especially when the markets are volatile. I think I stopped using when the market was just going up. I'm like, okay, it's just going up. Like it's just going up. And then when it's more volatile, RSI actually does help with kind of understanding. We got Bloomberg here, events going around the world. So RSI is the relative strength index that kind of shows exactly what the market sentiment is. So as a relative sentiment index, it's a sentiment index. So we have some tools that shows us. And I also like to, just like you guys said, go to the source and see what the people are feeling. Now, there is a catch here because as you're doing your market sentiment analysis, what often happens, especially if you don't already know your risk tolerance and if you don't have confidence in your asset, you may get swayed by the news. So emotions are very real, right? So let's say you're absolutely confident about Apple. You're like, Apple, it's gonna stay here for another 100 years. It's gonna go up, no doubt about it. And then you go here, hypothetically, this never happened, but you hear that, oh, Warren Buffett is selling all of his Apple stocks. Like, I'm actually curious to hear, like, I know Tristan is an Apple guy. Like, if you hear that Warren Buffett is saying, I'm selling all of my Apple stocks, like, how would you feel? Shocked, right? You would get shocked. And you may actually catch fear that, oh my gosh, maybe I should go and sell my Apple stocks, right? How many guys are with me? How many guys are getting it? So market sentiment analysis can be a little bit tricky, especially, and sometimes you do the opposite. We look for confirmation bias. So you love the asset that you picked so much that you're ignoring all of the alarm signs and you're only looking for somebody who's agreeing with you that the stock that you picked is the right one. How many guys have ever had that? Like, I don't know, it doesn't have to be a stock. Like, let's say you found a new boyfriend. You know, all of your friends are saying, he's trash, dump him. And you're like, no, it's the best. And you like just go hang out with that one friend who's probably toxic and is like, hey, he's a good guy, right? So we human beings, we do confirmation bias all the time. So that is why market sentiment analysis sometimes can be tricky. And that's why when I sometimes do market sentiment analysis, and I have my go-to places that I go to. So these are the 3 things that I do. The first thing that I do is that instead of waiting for the news to scroll on my social media, because this is actually very, very dangerous. Now the algorithms know how we feel. They actually show us the stuff that they know we're going to agree to. So if you're waiting for social media, for TikTok to give you some sort of news, that could put you in danger of getting into the pattern of confirmation bias. How many guys are getting it? Does that make sense? So instead of waiting for social media or Twitter or anything else that has AI algorithm to tell me about different assets, I just, like, I go on incognito on Google and I look at all the news, and then I'm like very cautious that I'm trying to basically be as open-minded as possible, and even sometimes play devil's advocate with myself. And sometimes it's hard to do that. That's why I love it when we're doing it as a mastermind, like with our $1 Million Family Accelerators, we mastermind together. And I ask our students, okay, so tell me whatever it is wrong that you find about this asset. Or if somebody's like, no, this is not cool, you're like, find whatever that is right about this asset. And you mastermind in a small group so that you know that who have the knowledge, who are not like emotionally attached. And that way you kind of lower the chances of being alone and getting carried away by your emotions. GPT, by the way, it doesn't actually have data past 2021. So if you ask GPT, what is the best stock to invest in right now, it actually doesn't have the most accurate stuff. Even though I know that somebody asked, I went through Warren Buffett's style and it came up basically with Pepsi, which is like, oh, really, duh. So like Warren Buffett has Coca-Cola and you said Pepsi would go with the portfolio. Yeah, I mean, big deal, Chat GPT, but it was pretty good. So anyways, so that is how I like to do it. So there are some places that I like to go. So I go to the source first. I go, like, let's say I want to invest in, I don't know, Amazon. I go on Google and I go to the news section and I see, look at all of the headlines just to kind of gauge what people are thinking, saying about it. Like, what is going on? Are they having any scandals? Is the CEO getting fired? Like, what's happening? What is the word on the street? Now, market sentiment is always for the short term. And one thing that I want you guys to recognize is market sentiment analysis is different than fundamental analysis. Fundamental analysis is fundamental. Like, fundamentally, this is an asset that I want in my portfolio. Market sentiment analysis is short term. Like, okay, do I want to buy this asset right now? Or do I want to wait? How are the people feeling about it? Does that make sense? Is everybody clear about the difference between market sentiment analysis and fundamental analysis? Fundamental analysis, you go to the actual website, you actually know the product. We talked about the easiest way to do a fundamental analysis is becoming the customer of the company. So obviously that is the easiest. There are different ways. If you're not like Bitcoin, you're like, okay, how do I become a customer? So we have different ways of fundamental analysis to do really, really deep research on them. But that is different than market sentiment. Market sentiment is what are people saying about it? Okay. And the goal of that is not to agree with them, is actually typically to go against them. Because what everybody, human psychology, like scientifically, says that everybody wants to do what everybody else is doing and nobody wants to do what no one else is doing. That is why going against the crowd is so damn hard. Because nobody wants to do what nobody else is doing. You're going to be the black sheep, right? Like we want to fit in. It goes really, really deep in our roots, in our psychology, that we want to do what everybody else is doing and nobody wants to do what nobody else is doing. That's why you typically want to have an accountability partner, right? That's why these masterminds come into play. And sometimes, like, I even do it with my husband. It's funny because, like, he was the one who yesterday came to me and told me about Michael Barry. He said, oh, sell everything. And I'm like, so I had to kind of stop him. And then he was like, but he has a point. And then we went back and forth with our emotions. And once everything settled down, we were able to see everything clearly and say, okay, so this is what he says, this is what the chart says, this is what I say, this is what our financial situation is, this is what our goals are. And we're able to, as a couple, remove the emotions and create a strategy that makes sense to us. Isn't that beautiful? You guys would like to create a strategy like that without getting emotional. Some guys would like to have an investment strategy like that. That is exactly what we're going to talk about today, and then carry it along towards the actual event, which is the Build More Wealth Live. So the first place I go is the news. Then I kind of like to go to Seeking Alpha, stockcards.io. They also have like different opinions of different analysts. And we see all the bulls and the bears and the greens and the reds. And you kind of can gauge what all the analysts whose job is to watch the markets are thinking, and kind of gauge that. And then I like to go to the charts. And this is, again, just to look at the short-term market sentiment. So for market sentiment analysis, I typically look at shorter time frames. Now, how many of you have ever seen a chart of a stock? Because I'm kind of trying to gauge the audience here. How many guys are complete newbies and have never seen a chart, or like, what is even the chart? What are you talking about? Newbies. All right. So would it be okay for our more experienced audience today here that I kind of explain how the charts work? Would it be okay? All right, awesome. So let me see. I kind of feel like I don't want to get into Ichimoku Cloud today because we have some like really, really cool tools that help us understand the chart. Oh my gosh, where should I start? I feel like I'm a little bit experty today here. All right, I'm going to just dive in and show you a chart. We just dive in. We actually did show the chart the other day with the S&P 500. So I'm going to remove all of these indexes. Let's go ahead and share the screen over here. And I'm going to just do something that I haven't. Just give me a name of an asset in the chat box that you've been looking at. Because I kind of feel like you guys had a homework yesterday to find. Everybody's asking for Amazon. All right. I guess Amazon it is. RCCL. I wanted to go with something that I didn't know or didn't already had some. Let's see what this RCCL thing is. What is RCCL? Rajasthan Sindla. Oh, that's Indian. Okay. How about we go with something a little bit more international? Costco, Grab, Royal Caribbean Group. Oh, RCG. Okay, that's a little bit better. Nothing against Indians, but I wanted to just it to be a little bit more global. So, all right, let's. Oh my gosh, we have so many things. Okay, all of these things I already have in my portfolio. I guess let's go with Costco. Let's go with Costco, especially with the recession coming. This is actually an interesting one. So I'm going to delete all of my previous analysis here. And I'm also going to delete Ichimoku, like all of the experienced expert stuff. And then we're going to go to the monthly chart. So this now gets into technical analysis. So just again, for the newbies here. All right, this is a chart. This is a chart. And basically this line is showing the dates. This dates back all the way to 1987. And this axis is showing the price. Now, just by looking at this chart, this is on TradingView. I use TradingView for my technical analysis. Okay. So just by looking at this chart over the years, where has the price of Costco gone? Up, up, up. There's no only one way but up. Shania Twain talking. All right. So absolutely. It's just, so this is what we call a growth stock, right? But if we zoom in, let's zoom in 1990. Let's say it's 2000 and this just happened. Costco was going up. It had some ups and downs. It was going up, 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 a boom, up, 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 a boom. How would you have felt at this point of time in the year 2000? When the price of Costco dropped from 52 all the way to 32. Xiao says, I would feel terrible, right? Absolutely. And now we talked about this before, and that was our literal point, right? That when you invest in a good company, and Dennis has a point, I wouldn't care so much because it's a good company. When you have done your fundamentals right, that is when you don't care as much. But now, Dennis, if you knew that Costco is a great company and it was at 52, it was around here, would you rather buy Costco at 52 or at 36, or let's say 37? Yes, there you go. So here, Xiao had a very good question. Why would you take profit at 52? Well, this is the thing. Here's the thing. Now that we look back, it's very easy to say that, oh, duh, just take profit at 52 before it goes down. But how would we know? Nobody has a crystal ball. How would we know that it's going to drop? We wouldn't, right? So let's get back to basics. We talked about dollar cost averaging. Dollar cost averaging is just like, you know, at the beginning of each month, just going and buying. And overall, we're going to have an average that kind of traces the growth of Costco. And as I talked about before, at Investiva, we don't want to do that. At Investiva, we want to kind of be a little bit more proactive. And that is where I used to use chart pattern analysis. Now, how many of you guys can see all of these mountains and valleys on this charts? We see all these peaks, and then we see all these bottoms. Top, bottom, top, bottom. How many of you guys can see that? Put this in the comments. If you're on TikTok and Instagram, obviously, go to the link in my bio. Come on over, see the chart. All right. So this is the principle. This is the basics of technical analysis. This is the basics of looking at market psychology. So let's explain what is happening here. I always like to tell a story when I look at a chart. So what was happening here? Potentially, everybody was super happy about Costco and everybody was buying. And as a result, the price was going higher and higher and higher. There is more demand for it. There is more demand. The price goes higher. There's more demand. The price goes higher. There was more demand. There are more buyers. Amazing until here, what happened? There were no more buyers. The price of Costco hit $31.66, and the last person who bought it at $31.66 was like, all right, I got Costco, let's go. And then it was like, who wants to buy Costco from me? And there is nobody to buy. So what does this person have to do? He has to drop the price that he was selling at. So he drops, and then it drops again. It drops and drops and drops and drops until it sells. Now, whatever market sentiment news was going on over here, at here, this is where we call a support, right? This is where finally we find buyers. And now, because we found buyers, there are going to be more buyers because what? Everybody wants to do what everybody else is doing, and nobody wants to do what nobody's doing, right? So again, we get into another bullish sentiment until, again, there are no more buyers. And this continues, goes up and down, up and down, up and down. Now, we talked about dollar cost averaging being completely hands-off. The next best thing that you can do is to identify these key psychological levels, because typically, and especially, oh, this is a 3-month. It's a little bit too much. That's why I was like, oh my gosh, this is way not too choppy. As you get closer, and if you look at these charts at a shorter time frame, these choppinesses increase because you see more of what is actually happening on a month-to-month basis. If you go on the daily chart, you're going to see even more details, right? So as a technical analyst, as somebody who's trying to gauge the market sentiment, our job is to basically the first job is to find all of these peaks and valleys. And we call these key psychological levels, because that is when the psychology of the market shifts. Now, the cool thing is, typically these key psychological levels, as they repeat themselves, actually, no, the reason why they repeat themselves is because everybody's looking at the same chart. And they're like, wow, 415 was the price that the final seller was able to, the seller was finally able to sell. So people started looking at this price, or vice versa. I'm sorry, I think I kind of jumped a few years into the future as I went through the time frames. But at the same time, for example, let's say this peak. Can everybody see this peak right over here? Everybody's like, wow, 562 is a place that the last buyer was able to sell. And then it was all downwards after all. So one level higher than just dollar cost averaging is looking at these key psychological levels where they typically repeat themselves, and then telling ourselves, all right, these are the prices that people are basically looking at. Look at this line. I'm going to paint it orange because this is beautiful. How many guys can see this price, 475? No, this is not a trend line. We're just looking at where the trends shift. Okay? 475 is right over here. And it was the first time that it turned into a key psychological level was in January of 2022. Because before that, let's actually go backwards a little bit. Before that, the first time that it actually hit this price, Costco hit 475, was in 2021. October 2021, 475 was the highest price Costco stock had ever hit. And that's pretty cool. But then from there, it continued going up, and it went all the way up to 562, and then it crashed and found support at 475. How many guys are following? Somebody put an F in the comments if you're following me as we tell the story. All right, cool. Then from here, what happened? It went back up, came crashing down, went below it, and then came back up and found kind of resistance here. How many guys can see this peak? Is kind of this zone is now becoming a little bit of a psychological level. Now, one thing that I want to point out here is that psychological levels are never just an exact number, right? Psychology is never exact, but they turn into zones. Now we have this zone between 489 and 475 that obviously people are like, wow, this used to be support, and people stopped buying over here. Went up, came back down again, found a little bit of support here before going back down. And then this zone became even wider, right? And the cool thing is now this has become this median average of the past 2 years. Costco price has just been dancing around this number. Now, of course, I didn't pick this stock. I'm just like looking at this blindly, and every asset had its own story. But the cool thing about technical analysis is that now you get to understand the story of Costco stock. Isn't that cool? How amazing is that? Now, what do we take with this? Like, how can we now use this to create an investment strategy? What is the price of Costco right now? It's around $5.15. It's a story in the graph, right? Now, let's put our Investiva hat on. Based on what has been happening over and over again in the past year and a half with Costco's price, if you were to buy Costco, now just based on this chart, and we are not even going deep into the details here. Obviously, you can get even more detailed and you can like gauge so many different psychological levels to back this up. But just based on this, I'm just curious. Let's say you really want Costco in your portfolio. And right now, it kind of hit a peak at 524 and is on its way down. If your goal was to buy at the lowest price that is suitable to your risk tolerance, would you rather purchase Costco right now when its price is $5.14? I'm already getting all the answers in the comments. You guys are rock stars. I love it. Would you rather purchase at $5.14, or would you wait? Like, do you guys can everybody see that there is a high potential? Like, nobody knows for sure, but based on history, how many guys can see that there is a high potential that Costco stock price could reach at least $4.75? How many guys can see that? Yeah. And then we're getting a lot of people saying $4.15, and a lot of people were right on. I would set a buy on the order at $4.75 and $4.15. That is right on, but that is exactly what that is what you would do. And that is what we would suggest. Like, these are the different ideas, suggestions of potential medium-term key psychological levels for somebody who wants to have Costco in their portfolio. But it can get even more nitty-gritty than that. Because first of all, there's another support level here that we can like literally identify with our naked eye, and that is around 553. So that we have this whole range, and that is not to say that it couldn't even drop to 316. We're not going to go there. I'm just going to keep it simple for today. The next step, now we've done, let's say this is the limit of the technical analysis that you want to do. Okay, you still want to keep it simple. Now it's time to bring back all of your points of the Investiva Diamond analysis back together. Let me go back to Investiva Diamond analysis. What do we have? We had capital, intentional, fundamental, sentimental, and technical, right? Going back to here, we are certain in this investment strategy, in this asset. But now we want to remind ourselves, are we investing Costco medium term, short term, or long term? So you're going to ask yourself that. I don't know if Costco pays a dividend, because all of these things actually plays a role in your strategy development. So let me go to Yahoo Finance and see if Costco pays a dividend. It pays a minor, tiny bit of dividend. Okay. So why do I say that? Because for somebody who is investing for dividend payments, more than relying on the dividend on the stock price, you also have to make sure that you're buying before the dividend payment date, before the ex-dividend date, right? So there are so many different things that you want to consider. But now let's say you just want to buy Costco and hold for 7 to 10 years for the sake of argument. Would that be okay with you guys? Everybody say, somebody put an L in the comments if creating an investment strategy for somebody who is confident in Costco, who has medium risk tolerance and wants to add Costco to their portfolio. Would that be okay if we create a strategy for that person? All right. Still here, we're going to have different answers for different people. So every single time I go about to set a buy limit order. What is a buy limit order? A buy limit order is kind of like a crock pot. You tell your broker, hey, I don't want to be stuck to my screen all day, but I know this is the price I want to buy my stock at. Can you just like buy it for me when I'm like not around? And you hit the button and the broker says, yes, ma'am. And you just go about your day. That is what a buy limit order is. All right. So that is our goal right now. So the next step is, all right, which price am I going to set for my buy limit order? We're already getting questions. What if it goes to 415? What if it never reaches that buy limit order that you really wanted? Those are the exact questions that is going to determine your final, unique, personal strategy. Now, how do we do that? By asking 2 questions from ourselves. How many questions? 2 questions. Question number 1, and you ask this at each and every level. You start by the current market price. You ask yourself, okay, Costco is at $5.14. If I buy right now at $5.14 and it drops to $4.15 by $100 tomorrow, how would I feel? How would you feel? Put it in the comments. You bought today at $5.14 and it drops to $4.15 tomorrow. You got pissed, not good, okay, disappointed, I feel okay. You see, we're getting all of these different answers and all of them are okay. Now, I want you guys, that this is very personal. Like, I do not have an answer for you. This is something that you actually have to sit and feel. So sit and like literally visualize that happening. Like, okay, I'm gonna buy at $5.14, it's gonna drop to $4.15. How do I feel? Right? Like, play that sound. All right, now hold that thought, hold that feeling for a second. Now you're asking yourself a different question. If I bought Costco right now at $5.14, I'm sorry, if I didn't buy Costco right now at $5.14, and I'm like, you know what, it's gonna drop, I'm not gonna buy right now. And then tomorrow I wake up and its price has gone up to $6.09. How would you feel? Again, not good. Dennis, good, right? So you're now, again, bringing an emotion out. Bad, we're getting bad, bad. Oh, crap. A little crazy on emotional. Amazing, so good. Now, here is the kicker. So obviously, if you bought right now and it dropped to $4.15, you feel bad. And if you didn't buy and it went up, you also feel bad. The kicker and the final answer that is only going to make sense to you for this price point is this. Which of these 2 feelings were crappier? Which one was crappier? Would you rather miss out and not overpay? Or would you buy and risk a drop? And now we're getting all of these different answers and all of them are okay. The point of this team is to create a strategy that gives you a peace of mind. Typically, what I do is that if the price currently, would it be okay if I share what I do? And again, I'm talking about somebody who has a long-term goal, and my risk tolerance, my ability, and my willingness combined typically is medium high. If the price of an asset, so there are a lot of ifs here, right? If I really want this asset in my portfolio, like I've done my fundamental analysis, like this asset is golden, I just want it, I want to write it out for 10 years. This is the best thing since applesauce. I don't know, whatever. Okay. And if its price currently is lower than the all-time high price, the all-time high price is 609. That is the highest Costco price has ever been. If the current price is lower than that, and I really want that asset in my portfolio, and I don't have any of it in my portfolio. If I don't have any of it in my portfolio, I typically allocate a tiny bit, very close to the market price. Again, I never ever buy at the market price. I always set a buy limit order. But if it's at 514, maybe I'll set a buy limit order at 513.98. And let's say I wanted to buy a total of 100 shares of Costco, I would probably buy my first 5 shares at this price. Or maybe 10 shares. Again, depending on what my emotions told me when I asked myself these 2 questions. And then I go ahead and I do the same thing for each of these buy limit orders. And with the systems that I'm going to teach you, you're going to have so many different options that is going to allow you to do this way easier, like literally looking at the chart and saying, okay, no, the market sentiment is actually bearish, like it's going to go down. So that is going to help you with these questions. But right now, even without that, you're going to ask each and every about each and every one of these buy limit orders. And typically, I set around 3 buy limit orders. How is this different than dollar cost average, like pure dollar cost averaging? Is that we're doing it smartly. We're doing it, first of all, at key psychological levels. So we're not wasting, like buying at $4.95, like prices that may never ever reach for no reason. We're basing it on our risk tolerance, and therefore we're not going to panic. And chances are that we're typically are going to get better prices. Like this happened literally with NVIDIA for me, and people who've been following me, that is one of the things that I've been sharing, like NVIDIA and Amazon are 2 of the stocks that I typically share with my audience. So this is like one of my best stories, because I started buying NVIDIA when it was about, well, did they do a stock split? I started buying it like back in here. And we sold some, we bought again, we sold some. And then I accumulated so much around here in 2020, all the way to 2021, that I literally stopped buying NVIDIA. I had 1,000 shares of NVIDIA. I stopped buying NVIDIA at here. So I was like, I'm not going to buy NVIDIA because I have so much of it, even though NVIDIA was one of the things that I really wanted to have in my investment portfolio. I stopped buying altogether. I'm like, I'm only going to buy, like, I don't feel like I'm missing out. I have a massive allocation to NVIDIA. I'm only going to buy, and like when it drops to 222. And back when NVIDIA was just going up, that was a very big call. You know, I did not know a crash was coming. I actually thought the COVID crash was it. I did not know a recession was coming. And I'm like, you know what? I'm cool with it. I don't want to continue buying NVIDIA. I have enough of it in my portfolio. There are other stocks that I want to buy. So I didn't bother. And then, fortunately, NVIDIA stocks started dropping. Now, there is a mistake that I made. I became cocky, and I talk about this a lot. I have this 50-50 rule that after every 50% gain, I sell 50% of my assets. And by around here, my business was making so much money that I kind of was like, you know what? I'm never going to sell, yada, yada, yada. We were doing great, and we're still doing great. But that is a mistake that I admit that I made, that I should have just stuck with my original investment strategy that had helped me like throughout the years. But even though I didn't sell, I still was up on NVIDIA because I started buying back in the day. So it still didn't matter as much, but I could have taken some profit. Nonetheless, NVIDIA started dropping, and I started setting buy limit orders. So at around here, when I saw like, oh my gosh, okay, this is crashing, I started setting buy limit orders. I believe my first buy limit was at 222 or so. Maybe I think actually I have to go back down and check it, but I think I had it really, really low. It probably was actually the 50% from last year's race model by around 119. And then I set my other buy limit orders at 136 and 111. And guess what? All of these 3 buy limit orders went through, and it was amazing. And then it went up. And now that I'm back to my original investment strategy, which is selling 50% of my assets after 50% gain, now I was up on NVIDIA 50%. So this morning, actually not this morning, but I set a sell limit order to sell a portion of my NVIDIA stocks after 50% gain. And this morning that buy limit order went through and we took profit. And then I'll go back and I'm going to sell a little bit more if it goes higher. Not all of it. I still have skin in the game. And then if it drops, I'm going to buy. If it doesn't, I'm not going to sweat because I already took my profit. So this is a little bit high level today. I hope I didn't confuse you, but so far, was this helpful to you guys? Awesome. I'm so happy that I was able to help you. And that was literally our goal. And this is our last day. And there's so much more that I want to tell you guys. But one thing that I want to ask you is that, and actually I want to tell you guys a story. How I started, like I get asked this question a lot, especially on TikTok, and people are like, oh, you don't share with us how much you invested and how much was your principal. And, we get all those things. And I address it all the time, but people miss it. I'm going to address it again. So this is how my investing journey began. Would it be okay if I share with you how much money I actually allocate to my portfolio? All right. So when I started back in the day, 2012, like I started broke as a joke. I didn't have any money. I started some side hustles. I made some money. I started allocating $500 per month to my portfolio. And that is as I was building the Investigo Diamond analysis, and I was trial and erroring and doing all these things. At one point, I lost everything because I was doing day trading. Then I finally came to my senses, like, okay, value investing is the way to go. And then I started, again, allocating $500 per month now as a value investor. $500 per month as a value investor. And in about 3 years, those accumulations, again, somebody needs to do the math, $500 per month for 3 years. Somebody do the math, how much I allocated. My portfolio in 3 years turned into $50,000. Lisa says 18. Okay, perfect. So it was $18,000 contributed to my portfolio. And in 3 years, using my strategy, the 50-50 strategy that I just showed you, I actually turned it into $50,000. So instead of, if it was just sitting in the bank, I would have had $18,000, but I invested it, I used the strategy, and it was $50,000. How many guys agree that $50,000 is way better than $18,000 in 3 years? Is that cool? How many guys would love to have $50,000, right? In your portfolio, right? And it's still working for you. And you're still getting dividends, right? It's still growing. So it was amazing. And I was like, this is so cool. Like, awesome stuff. And then I was looking at it and I'm like, wow. With this same strategy, like $50,000 is great. Like I can take it out and go buy a grand piano or something, I guess. What is $50,000 at this point? Like nowadays you can't buy anything with $50,000. That's like really cool, but it's not like $1 million status. Like I was kind of pissed off. I'm like, okay, like I did all this thing for 50K. Like what the what? Like how can I make more money without taking more risk? And now, how many of you guys know how much my portfolio is worth? So right now, as we speak, my portfolio is fluctuating anywhere between $5 million to $7 million, depending on the market. The markets are up right now, so we were $7 million. A month ago, it was $5 million, somewhere around that, okay? And it's pretty cool. Like, I don't actually care. Like, my lifestyle doesn't change between $5 million and $7 million, which is pretty amazing. Like, I'm like, oh, 5 million, cool. $7 million, cool. Like, I don't like really care. It's pretty cool. So it's $5 to $7 million, depending on the day. And it's way better than $50,000. Like I'm telling you, it's like way better than $50,000. So would it be okay if I share with you this like really simple, like it is stupid when I say it, but would it be okay if I share like what was the differentiate maker between having a $50,000 with the same exact strategy and a $7 million portfolio? Like, this is where I'm like a genius. It goes, oh, Kiana, duh. But like it had never occurred to me that if it's like zeros, like look at math. Like somebody take out a piece of paper, right? So I was like, okay, I invested $500 per month. My Remarkable is starting. Wait for it. I invested $500 per month, like put $500, and I turned it to $50,000. Okay. I'm like, okay, what if I added, oh my God, come on, Remarkable. What is going on with you? Do I have another notebook here? This is not a very, okay, here it is. So what if, Remarkable, you're not doing a very good job of, here you go. Remarkable is actually Remarkable. But so like, okay, $500 turning to $50,000. What if instead of $500 per month, I just like added a zero? I contributed $5,000 per month. Same exact strategy. That would have been what? $500,000 in that 3 years? If I had figured out a way to allocate, to contribute $5,000 per month to my portfolio in that 3 years with that same exact strategy, I would have had $500,000. Now, how many guys agree that $500,000, like you can buy a ton more crap with $500,000, like compared to $50,000? Like it's just a zero. And how many guys agree that like going from $500 per month to $5,000 per month, if you think about it, is not that big a deal. Like you can find a way, like some side hustles, and like maybe like do something, like do a little bit more, like make a little bit more money, spend just a tiny bit, like invest a tiny bit more and have this much more money. Like what the what? And then I was like, okay, let's go crazy. Okay, hold on. Let's go crazy. What if I allocated $50,000 per month? I added another zero. And I know, like at that point, like 50,000, like where are you gonna even make that? But that's not the question you're gonna ask that. You never ask yourself how. Because once you see it, the how is irrelevant. You're gonna find it. The how is irrelevant. So like, okay, let's add a zero. Well, we add it, we might as well. So I added a zero. And boom. I kid you not, team. this is how I shifted my mindset. I'm like, if I can figure out a way to contribute $50,000 per month to my portfolio in 3 years, I'm going to have $5 million. How many of you guys know that that is exactly what it freaking happened? That's exactly what happened. 2019, I think I asked myself that question. And I always had a business, but I never was thinking at this level. I never even thought it might be possible that I would have enough money to just not only pay for my mortgage and pay for my food and pay for my stuff, but then go and invest $50,000 of it in my portfolio. I couldn't imagine, what kind of out of touch person would even think that? But guess what that is? It's a limiting freaking belief. It's a limiting freaking belief. Because people are doing it all the time. There are people who are allocating $500,000 per month to their investment portfolio. Think and go rich. Not have a limiting belief and sit in your corner and saying that's not possible and scroll on TikTok and grow rich. That's not going to happen. That's not going to happen. That's not going to help you. And I'm not saying it's easy to change that mindset. The only way that I was able to do that was to surround myself with people who look like actual normal people, not robots. Like I was in the room with these people. I was like, oh, you are an actual person who looks so normal, with the same nose and the same eyes and the same ears, and you have made $1 million in your business in a year. I mean, I guess I could do it too. That is the power of proximity. That's what Tony says. And I had never even heard of this. But now that I hear it, how many guys can agree that proximity is power? People is power. Surround yourself with the people who have achieved what you want to achieve. How many guys now, before maybe you saw me on social media, you're like, okay, she's bragging about her portfolio. But now you understand and maybe even grateful that I'm making having a $5 million portfolio so normal to you. I came to America 10 years ago, I don't know, 12 years ago, whatever. Got fired like a normal person, got dumped like a normal person, But what did I do differently than the rest of the people? First of all, I did the math. that was huge. That was big. I did the math. So now you know the math. Tomorrow morning, you need to wake up and say, hallelujah, I know the math to get to $5 million. Now you know. And you have proof. So first I did the math. Second, I didn't let my limiting belief get in my way. And as I saw it rolling back in, I was so lucky that I found people who had achieved what I wanted to achieve. And I used them as my role model, as I used them as an inspiration, that it became this is happening. This is it. This is where I'm going. This is done. And then what did I do? I took massive, consistent action. Massive, consistent action. How many of you think that if you go to the gym for a week and then do nothing, you're going to have amazing muscles for the rest of your life? No, right? Doesn't work that way. You got to take massive, consistent action. This past week, it was your first week in the gym. My massive, consistent action was that I found coaches who had achieved what I wanted to achieve, and I submitted to them. They said, do this, I did that. They said, do that, I did that. And again, I'm not talking about like go find like a scammer online. I have coaches, you know my coaches, I bring my coaches. In fact, one of our coaches is going to be in the not the $1 Million Family. Okay, we have a lot of my coaches in the $1 Million Family Live Accelerator, but next week, one of my biggest coaches is coming one of the days. I'm not going to tell you why, when. And I just modeled them. And so the reason why I'm so passionate about the Build More Wealth Live that we're doing next week is because how many guys agree that investing alone is great, but it's not fast enough? Like, it's way better if you have a ton of cash flow coming in and then invest that. Is way better, right? So that is why next week we're going to focus on the other side of the equation. How to go from $500 per month to $50,000 per month, to $100,000 per month, to $500,000 per month, to $1 million per month, which is where we are almost right now. We're somewhere between $500,000 per month to $1 million per month. Like, who would have even thought? I actually never even thought that would be possible. My goal was not that. My goal was 50K per month. And again, that is revenue. Obviously, that is not how much I'm contributing to my portfolio, but revenue in my business. How many guys would like that? And if you're scary, that's good, because you're feeling something. And it would be my honor if you guys pick me as your coach. Like, this is an insane price for the stuff that we're going to teach you next week. We are going to teach you how the framework that took me from that $500K per month to now over $500,000 revenue generated per month. How many of you guys would like to come join us next week? We're starting Monday and we're going full on. This was just a pregame. And we have some amazing guests for you guys, especially if you're a VIP. We're going to talk about all the things that you need to do step by step to increase your income so that you can build more wealth. All our VIPs in the house, I'm going to see you next Monday at 4 p.m. sharp on Zoom. So I'm going to see your beautiful faces. Come camera ready. Have your background. If you're already VIP, you probably already have your background. And if you don't have your tickets yet, would it be okay if I share with you where you can go ahead and get it? If you don't have your tickets yet, where you want to go is to go to buildmorewealth.com or just link in my bio, buildmorewealth.com. Actually, maybe I can put that in the chat box. Oh, Tristan, you're awesome. You put it in the chat box for us. Once you save your seat here, you go to the next page. It looks like this. You get to choose your event experience, and you click on one of these buttons and you see exactly how the general admission is different than the VIP experience. The VIP experience, you get all of these courses in addition to an hour extra with me for question and answers about anything that is going to help you make more money. We are going to have special guests who are going to talk about artificial intelligence and all the other cool stuff, money mindset, money mindfulness system. You're going to get some courses on ultimate precious metals, and you are going to get to participate in our exclusive raffles to get that free iPads and headphones and Remarkable and notebook. And plus, VIP actually is 100% money back guarantee, VIP only. General admission is not. And it comes with a catch. It is only that money back guarantee is if you attend all 5 days. And you say, hey, it wasn't worth it, we'll give you your money back. We do not want your money if you believe that we didn't create value for you, actually 10 times the value of what you paid, we'll give you your money back. And also, last but not least, the VIP is going to have first access to purchase an upgraded platinum VIP ticket. So we have so many VIPs this time, team, that not everybody is going to be able to ask questions. So the platinum VIP, it is not for sale yet. We're gonna see if you want to do that, but the platinum VIP is only going to be available for VIPs to have a guaranteed access to me to ask a question about your wealth ecosystem. So if you're a VIP, if you know that like this is it, like you are ready to take your business to the next level, come as a VIP. The power course is, so actually let me just clarify 2 things. If you're like, okay, you know what, I'm not an entrepreneur, I don't want to have my own business, I'm good with just like whatever it is that I am right now, we have a completely different product. It is called the Make Your Money Work for Your Power course, and that is a different product, and it's great, and you can ask us and we can guide you to that. This is completely different. And so even if you're a power course member, this is like a different system, a different course. So first of all, if you're a power course member, you have to purchase your ticket because it's a different service, different product, and it's different. So if you don't want anything to learn about business, then you probably want to go to the Make Your Money Work for Your Power course. You can learn more about it by going to investdiva.com/masterclass. The Build More Wealth Live is going to bring everything together. We are going to dive deeper on investing on day 2, but the rest of the 5 or maybe even 6 days, we may have a bonus day for you guys, is going to be more about the whole generating income, the cash flow part of things. Cool? All right, team. It's Friday night. Let's go party. Thank you so much for attending. You guys are amazing. You guys played full out. I'm so proud of you. You should be proud of yourself. Just pat yourself on the shoulder to say you're amazing. Like, this is a win. You did it. Like, you guys are just amazing. I'm just so impressed by you guys. I know that this shows that you're committed, and I can just see that amazing things are going to happen to you. So on a count of 3, we're going to yell out, I am abundance. Let's go. 1, 2, 3. I am abundance. Yes, team. Amazing job. I will see you guys on Monday. Bye.